Hello, everyone. Thank you for joining us for today's EEA Education Series webinar. Today, we will discuss the emergence of open banking in Web 3.0. Today's call is being recorded and will be available to all attendees soon after today's presentation. The Enterprise Ethereum Alliance enables organizations to adopt and use Ethereum technology in their daily business operations. The EEA empowers the Ethereum ecosystem to develop new business opportunities, drive industry adoption, and learn and collaborate with one another. We welcome any and everyone to join and become a part of our global community. At this time, we are pleased to introduce our moderators, the Open Banking Lead of API3, Robert Rico, and the Head of Latin America and Blockchain Initiatives at the Open Bank Project, Francisco Montenegro.
Thank you. Hi, everyone. It's a pleasure for us to be here and bring you this session in our partnership with API3 and the Open Bank Project, and just talk a little bit more about the emergence of open banking in the Web3 and what this innovation really represents. So to begin with, we have an agenda. Robert, can you go on to the next slide? Where first we will spend the first 20 minutes just introducing a little bit about the team members and the companies. And then we will briefly touch on what is open banking and what this means for the Web 3.0. Following that, the API3 team will explain the API connectivity problem with the Air node as the solution and the gateway for bringing open banking data into the Web 3.0. And then we will talk a little bit about our 10-year development partnership to meet this objective in conjunction with the Open Bank Project and API3. After we touch on these introductory topics, we will have a panel discussion between OBP, the Open Bank Project, API3, and DAI. After that, we will have a Q&A. So I encourage all the listeners to please post questions in the chat as we go, and we will be addressing them at the end of the panel. So the Open Bank Project, we have Simon Redfern. He's the founder of the Open Bank Project, CEO of Tesobe, and he's an open banking pioneer of the UK open banking movement. My name is Francisco Montenegro. I'm leading the blockchain strategy at the Open Bank Project. And on behalf of the API3 team, we have Heikki Vantinen. He's the co-founder of API3. We have Robert Rico. He's the open banking lead and legal. And then from DAI, we have Raul Nava Salazar. He's the fintech director of DAI, and he has previous work with the Mexican regulators. So in this discussion, we will also be hearing the perspective of the regulators in terms of what we're doing with open banking and the Web3. So on to the next slide, Robert, please. To give a little introduction on our company technology, it's the Open Bank Project that was created by Tesobe. Tesobe innovated with pioneering the UK open banking standards, and since 2010, they built the Open Bank Project, which has become the leading open source open banking solution in the space, with more than 400 APIs that cover multiple regulatory standards around the world, and that has reached a vibrant community of 11,000 developers that are using the standards to build mobile apps. And it also has done work consulting regulators around the world with their standards, with the Berlin Group, Australian CDR, and the latest one being Mexico Open Finance. On to the next slide, Robert. So just to get everyone here on the same page of what is open banking, and open banking started as a movement to democratize financial data to the customer, because the customer should have access to their financial data when and where they want it. And this is all done via API. And since the inception of this, it has become the foundation for many fintechs to flourish at the expense of the bank. So we view open banking as the perfect gateway or the rails to embed or connect DeFi solutions onto the traditional banking industry, or to make available traditional financial products or traditional open banking use cases onto the decentralized web.
Also in partnership with the bank, right, Francisco? You said expense of, so not just expense, but in partnership. With, yeah.
Yep.
Yeah.
And next slide, please, Robert. So OpenBank Project, in the last 11 years, we have worked with more than 60 financial customers. And like mentioned before, there's around 11,000 developers that are using OBP standards just to try to build better apps. And we have worked with regulators, and we have 20 partners around the globe, where our latest partner is API3, and this one comes completely in the light of innovation and trying to innovate this space, as we are first movers in making open banking data available to the Web 3.0. Next slide, please, Robert. So what does the open banking or open finance data for the Web 3.0 mean? Well, just to explain here a little bit, open finance is an extension of open banking, where it makes accessible other products that are not agnostic to the banking industry, that can be incorporated into the banks via APIs. So what does open banking APIs enable? In the most basic form, it's read account information, where you can have in a third-party app, and you can have access to your bank account. You can view how much money you have from different bank accounts into one app. And the other use case is payment initiation, where you can actually start a payment from your bank account on a third-party app. The other common use case is banking as a service, where a bank can deploy one of their financial products onto a third-party app and reach a broader network that they normally couldn't. And on the banking as a platform side is a way for banks to integrate third-party services that are not developed from the bank into their digital interface or their digital offering. And some other use cases are account aggregation, where banks can aggregate several accounts from their clients, and they can have better analytics to provide better credit scoring and have a better view on their customers, and provide them better products. So with open finance, it incorporates other components, where it's insurance, stocks, and pensions, for example, that are not traditional just to the banking industry. And we want to translate all of these use cases into the decentralized web. We think that this is the perfect gateway to bridge these two worlds, because why a user in his DeFi app shouldn't be able to read their bank account balance or start a payment from their bank account balance, or also enhance some traditional banking offerings via banking as a platform, and incorporate some decentralized finance offerings into the banking digital interfaces. So this is our view on this, and this is how we're going to do it. I'll explain on the next slide, please, Robert. So in our technology, the core banking feeds open finance data to the API layer, which is provided by the OpenBank project. And all these APIs enable different use cases for accounts, payments, KYC, branches, products, and more. So now these are not natively connected with the Web 3.0, but we're solving that with the partnership with API3. By connecting our OpenBank project APIs with the Air node, we can make Web3 connections where we expect to see many use cases arise and many services to be innovated. And some of this will be discussed in the panel. So now I will pass it on to Robert to talk a little bit more on API3 and to discuss a bit on the API connectivity problem.
Thank you, Francisco, and thank you for the great overview. Thank you for EEA, the folks at EEA, for having us here and allowing us to share what we're working on. So a little bit about API3. We've been in this space since 2018 through API3's predecessor and working connecting APIs to the Web 3.0. We connected various amounts of APIs, many APIs, and various amounts of different variations of APIs to an Oracle infrastructure. And in our experience there, we found critical limitations to really to efficiently onboard data into the blockchain on-chain. And so these limitations really drove us to innovate and to think about this problem of how to deliver data efficiently onto the chain. And so it really drove us to innovate. And so the first thing that API3 did is first of all, API3 is DAO governed, meaning that there is no centralized party, rather it's the entire community steering the ship. And our developers have been just phenomenal. We are now compatible with EVM, with the various EVM chains, Ethereum, Polygon, Phantom, Harmony, Plasm, Tomo Chain Complex, to name a few. And also we are backed by some of the most respectable folks in the VC space in cryptocurrencies. Digital Currency Group, Placeholder, Pantera, Coin Fund, Accomplished, and Hashed. And our newest partner is OpenBank Project here, where, as Francisco just stated, we entered into a 10-year partnership to bridge open banking data to the Web 3.0. And so a little bit about API3 and what our mission is. Really, our mission is really to make APIs fully compatible to Web 3.0. And so you may be asking, well, why APIs and why are they so important? So APIs are the glue to the internet. They are what make the internet as we know today run. And so, for example, corporations such as Salesforce, eBay, Facebook, Google, all these different corporations our society really relies on to provide these services are powered by APIs. And so if Web 3.0 wants to interact with the real world, we need to make APIs as synced as possible with the Web 3.0. So making these APIs connected. And the reason is because if we're able to connect APIs directly to Web 3.0, it's going to create new dApps. We're going to be seeing new smart digital agreements, smart contract-based digital agreements, and it's going to expand. In our point of view, it's going to expand the markets for these decentralized networks. More endpoints, more API, more dApps, more agreements, more transactions. And so, how do we get there? And what we solve for API3 is the API connectivity problem. And what that means is that, well, looking at blockchains is the way that blockchains achieve consensus, they cannot natively connect to external data. They cannot natively connect to APIs. And so what we've seen develop over the years is that current connection solutions really are depending on middlemen. And what this has seen is that API providers require these expert management people and teams to come on board and connect with Web 3.0. So it's essentially asking these API providers to onboard an entire different team, an entire different structure within their companies. And what we've seen, it's just not scalable. And what we've seen over the years is that many API providers, and remember API providers are companies at the end of the day, they're hiring third-party companies that deliver and resell the data for them to the Web 3.0. And this really, in our opinion, opens up a big can of worms because API providers are risking GDPR breaches, spillage, and unauthorized data resell. And on the topic of GDPR breaches, I think this is, or we think this is one of the most important topics to address because as it goes into a GDPR breach, if, for example, an API provider breaches a GDPR and they're plugged out, it doesn't only impact API providers. It's going to impact the dApps and blockchains that they run on. So it's very important to make sure that API providers have this ability to be GDPR compliant. And so here we have an illustration that showing API providers can connect to dApps. And so from our experiences, previous solutions really focus as how do blockchains as a technology connect web APIs? And API3's focus is really ask the question, well, how does APIs as a technology connect to blockchains? And as a reminder, data sharing happens through APIs. The main solutions that we rely on are powered by APIs. And the key point here is really that all APIs, they have adapters, they have standards to share such data. However, up to this day, there's no uniform standard API adapter that exists for APIs to connect Web 2.0 data to Web 3.0, to the Web 3.0. And so this is where we proudly at API3 are excited to share with you the AirNode. From our opinion, this is a breakthrough in our space. AirNode is a simple to use open source API gateway that allows API providers to directly and easily connect to Web 3.0 without any active management or use of a third parties directly from the API. And what this looks like, it's a quick setup in minutes. It's a set and forget function. API providers point their API, run the script, point their API to an AirNode, and they're connected. It's a plug and play, very easy, and it's also free for API providers to deploy. And the beauty of this is this allows API providers to retain full control of their data. And this allows them to be GDPR compliant when transacting in the Web 3.0, in the Web 3.0. And this is very important because now we're building here is an end-to-end compliance solutions from the data provider side all the way to the DApps. We are building these foundational pieces that allows these applications to be fully GDPR compliant and fully able to be regulated within the confines of the law. And so one of our excited partners here today is the OpenBank Project. We'll be providing over 400 open banking APIs to the Web 3.0. And so what this looks like is drawn here in this diagram. The OpenBank Project will be running an AirNode, and these AirNodes will be connected now directly to blockchain platforms. And from there, this is going to be a circle, it's almost a circle economy, where we're really after here is a partnership for end-to-end open source financial environments and financial technologies and solutions, which has never been before seen, to explore an entire system from traditional finance to decentralized finance, all housed under open source code, which is really just an amazing breakthrough in working in this. And so the way we're going to achieve this is OpenBank Project has over 11 years and experience with working 60 international institutional banks and 6 regulators. So we're going to be conducting in the first year of our partnership 4 tech sprints, these mini hackathons, where financial regulators, financial institutions, and the communities, the blockchain communities and fintech communities are invited to join and participate. And this entire realm of these different parties are invited to join and see what type of new financial realities can look like at large. And so for that ends our presentation here today of our solutions, and we will jump into a panel discussion. And to start off with, the first question will go to Simon. And one of the questions that's very often asked is, Simon, there you go. Simon, open banking is revolutionary in itself. It's radical in itself. And so now for open banking to connect to blockchains, that is also very radical in itself. What are the bank's sentiment in connecting open banking with blockchain-based applications?
Hey, well, yeah, thanks for the question, and hello everyone from Berlin. Yeah, so I think that the banks are interested for sure. When we mentioned this partnership and we're working with API3 and we mentioned blockchains and Ethereum and so on, they go, oh, like this, the eyes light up, and so definitely there's interest. I would say like the financial institutions that they won't be super fast to move, but yeah, they're definitely interested. I mean, banks took a long while to get into open banking. I mean, obviously, some moved faster than others, right? And some were dragged kicking, screaming because of regulators, right? But some banks clearly, their large part of their business is all around providing services over APIs, right? So when we add the blockchain into this mix and all the different efficiencies and all the different attributes you get from blockchains, I think that's a really, really interesting mix of technologies and capabilities that's gonna like bring just lots of products which are not possible to do now because they're just not efficient. You know, when you add blockchains to APIs, you have lots of possibilities. I think. Hope that answers the question.
Yeah, definitely. Francisco? You're muted, Francisco.
Francisco,
Sorry.
you're muted.
Yeah. I'm muted. I'm sorry about that. So yeah, question for Heikki. This is basically, you know, me being on the open banking space and knowing how banks are sensitive with financial data, or not even banks, but how sensitive financial data is in itself. And you being a veteran in the API blockchain space, let me ask you, how does API3 enable centralized sensitive banking data to be used safely on decentralized blockchains? How do you ameliorate some risks like exposing personal data and other vulnerabilities that the public might perceive as we go forward?
Right, yeah. Well, I think like there's the distinction of do you, first of all, in blockchains, do you build on a public blockchain or a permissioned blockchain? And then for a permissioned blockchain, the sort of the risks of data exposure could be smaller if it's within a permissioned network of nodes being sort of different banks and so on and so forth. That could be permission to have access to that information. But then when you're talking about Ethereum mainnet, obviously all of the data is public to everyone, so you probably don't want your like bank account balance on Ethereum mainnet. But I mean, I guess in the sort of the spirit of open data and open banking, even that could potentially be an option for you if you wanted to, you know, prove your wealth in some way to a DeFi application, for example, and it's your data, so you could do it. But obviously, I think overall, you know, it comes down to kind of having a lot of that data off chain, but be accessible to a user on chain. I think like there, the question of identity becomes a pretty salient one. So like, how do you connect an on-chain identity with an off-chain function, and how do you do that in the context of oracles, when oftentimes oracles are mainly being considered for very general data types like price reference data or the weather or sports scores or something like that. So how do you like actually point an oracle request to a certain user and then have that do something with the data off chain? I think that's an interesting question that I think we're going to be exploring as well. And then, yeah, so when it comes to the method of sort of transportation for the data transmission, I suppose, the question around the oracles is that, like, is the data being provided from the first party? Like, is the oracle also the data provider, or is it a separate party? And this is like mainly relevant for these sort of permissioned use cases where you have a network of organizations that have a shared ledger, and then share permissioned information within that network. Then like using some sort of third party for the Oracle middleware part, which is required to connect an API to that network, that would be exposing that data to that third party, and that's usually not what you want. And the sort of the solutions that are generally suggested for something like that are like trusted execution environments and so on. But then like the air node is kind of privacy oriented by design because it's operated by the data provider. So it's the same node the node operator for the Oracle is the same as the API operator. So it's not exposing anyone, or it's not exposing the data to anyone outside of the permission network. And so it's also GDPR compliant, for example, for these types of use cases. So yeah, I guess that's touching a little bit on many angles of the topic, but hope that's fine as an answer.
If I could just chip in there, maybe we can also, you know, imagine APIs which return kind of binary answers. You know, like in open banking, there's this kind of available funds APIs. You can also imagine, you know, APIs return yes, no, basically to questions. And so, you can always have like a sliding scale of information you pass to the blockchain, I guess.
Yeah, I think it's like very much a gradient. But then even like on the furthest end of that gradient, something like a binary answer wouldn't even be acceptable. So then you'd have to be like doing everything off chain. So like if, for example, if the question was, do I have $100,000 on my bank account? Then even a binary answer to that question, if the question was exposed, would yield something of like a privacy and non-preserving outcome. So
yeah,
that makes really great sense. And one of the questions I have for Raul is kind of taking that together. And so how Simon said that with open banking, there's some banks that were very much more forward thinking and moving forward, and maybe we can expect that with certain banks jumping onto the blockchain. And as Heikki just stated, this is a possibility that we can build these solutions that are compliant and preserve the privacy of users at the end of the day. And so Raul, with your previous experience as a regulator and now as a fintech director at DAI, please give us an overview of the Mexican regulations and how it works with open banking, open finance, and how that comes in together with the blockchain space, please.
Sure, Robert, and hello, everyone. Well, Mexico is a pioneer in terms of regulated fintech because it was the first country that issued.
Oh, we have freezing Raul.
Oh,
you just froze for a second, for a bit, Raul.
Oh, okay, I froze. So, well, I was saying that Mexico was a pioneer because it was the first country that issued a law that specifically addresses the risk that come when delivering financial services through innovative digital schemas. For example, in other countries, there are individual documents that regulate e-money activities, regulatory sandbox, open finance, or cryptocurrencies transactions. But in Mexico, the fintech law aims to act as a consolidating document that is based upon principles like, for example, financial inclusion, which in Mexico is very important because we still have a high percentage of unbanked population here, and principles like fair competence and being technologically neutral. So I think that basically settles the ground, for example, for open banking and open finance and blockchain, because, for example, open finance is actually regulated in the fintech law, and it specifies that financial entities have the obligation to open up their APIs, but for sharing data purposes. So when we have this mix between blockchain and open finance, I think that we can visualize like a lot of opportunities, because I think that the opportunities do not only come from banks, but also from fintechs that take advantage of consuming and gathering this information, and also in thinking in ways like automating processes or migrating processes from like legacy systems to blockchain processes and systems. And then how can these fintechs or financial institutions provide the services to customers in a more convenient and more cost-effective ways?
Thank you.
Thank you. Very, very interesting take from the regulatory perspective, and putting all the pieces together here from what has been said about open banking and what has been said about API3 Airnode and data oracles, along with the regulatory perspective. I think we need to start discussing about use cases. So before the use cases come to fruition, we will need to decide on which blockchain platform we will actually make this happen, and considering adoption to be a very important factor. I would like to pass here to the audience just some questions on which they think would be the most interesting blockchain platform for them. And there's in the poll. I don't know if you can see it. But going back to that, I would like to ask the panelists just some of their insights regarding what use cases do you expect to materialize out of these efforts? Yeah,
This
that's
is a general question to everyone.
Yeah, that's to Raul, Simon, and yeah, and you too, Heikki.
Okay, I would give a kind of humorous answer, if I may. So a while ago, I was organizing a hackathon and came up with this funny idea called love insurance, right? So what's love insurance? So love insurance is, you know, you're with your partner, you get married, or your girlfriend, and you want to put some money away for a rainy day, you know, and so you sign up with your friends, and you know, they are your witnesses, right? And if you split up with your partner, then you know you get, I don't know, $100 or whatever, or a bit more for some champagne and a holiday, right? You know, and here's an interesting use case for this type of integration, right? Because the smart contract, you know, they obviously you have to have something that's going to trigger this this event, right? So if you separate or divorce, you know, but then bang, 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 it's all automatic, right? You know, the money can, the smart contract could, it takes input from other people, decision is made. And you know, maybe if one of the parties is really down on their luck, then they get a bit of a bigger payout, you know, and you know, so you can use open banking APIs there to check balances and something like that. And you could, you know, obviously you could send ETH or so, but you could also make a payment to, you know, as they call it, meat-based bank account, right? You know, and I mean, this is a funny idea, or whatever, right? But I think when you get new technologies coming together, you get this kind of disruptive innovation, right? You get processes and products that are possible because of the efficiencies, you know, like they can run fast. And I think we'll see, you know, like a lot of that in you know, in the insurance space, and yeah, you know, so in the open banking space. And I guess, you know, another thing that Heikki touched on briefly earlier, you know, banks are like really well, I mean, people still trust their banks, right? I mean, they might be slow and so on in many cases, but they have to be slow because, you know, they're guarding lots of money and all the rest of it, right? But people really trust them in terms of identity, yeah? And, you know, they've got my passport, so yeah, so once you've done KYC with a bank, then, you know, that's an important thing. So, you know, we shouldn't only think about banks as repositories of transaction data. They're also repositories of identity information and a whole bunch of other data as well, right? Yeah. So that's
I think like that's a good point. Like they are repositories and they're sort of these walled gardens of information in many ways. And I think where that is highly valuable information or something that you would want to own as a consumer, a blockchain could be, you know, the platform to do that for. And I think like the vision is that that blockchain is going to be the answer to that whole question of self-sovereign identities. For example, in the question of identity, you just have validators, and those validators could be banks. Banks, you know you. For example, as a bit of personal background, I come from Finland, and basically all of the applications just use online banking verification for your identity, but then that's still something that is owned by your personal bank. Sort of this siloing that information and putting it on the blockchain, but just having it verified by these entities, I think that's a powerful use case for open banking data and these sort of identity oracles, I suppose. And then
because then we've got this, sorry, just to draw the picture a bit, right? So then we've got this totally distributed blockchains and so on, with all that good stuff, you know, immutability, no single point of breach or failure and stuff. But then we've got these, you know, like these highly secure big nodes, you know, and there could be many of them, right? I mean, this is one of the things that that open banking has done, right? Regulation has, like, okay, so, you know, UK were quick off the mark, but the whole of Europe right now, we've got we've got Mexico, many current countries in Latin America, Australia, Canada. It's brought the data up, right? Like it's brought the data to the nearer the surface. There's like all the banks have got these APIs now, and or not all of them, of course, but many more of them have got these banks. And then with these air nodes and these kind of point sources, we can feed some of this data into the blockchain. So I think that's quite a kind of robust, robust kind of pattern in a way.
Yeah, and once you do kind of achieve that on-chain sovereign identity, there's a lot of stuff that you can do with it. Like we discussed, connecting on-chain actions to an off-chain function, like sending money from a bank account. That is generally something that you could do with an open banking API. But for you to do that on-chain, that API off-chain needs to know that it's you actually requesting it, so that identity needs to be native on-chain. And so how do you then manage that is through this sort of validation scheme. And then just overall, I think that's just a very narrow sliver of what gets enabled by open banking data on the blockchain. You can truly say that the imagination is the limit.
Raul, did you want to say something? Yeah, cool.
Yes, thanks. I mean, I was thinking also in a use case, which is actually, for example, one real world example in Mexico. There is a company that is starting to make some piloting with, for example, mortgage credits, and they.
Raul, maybe turn off your video. Maybe, I don't know if you've got network issues. I don't know. Francisco, do you know about this use case that I was talking about, like mortgage credits also?
Yeah.
No, I haven't heard about it. But
I don't think so. Yeah, because it's very innovative, I think. So what the platform is doing is like conducting all these credit verification processes with the ID and with all the documentation. But there is a point that this company needs to make these payments, these disbursements from the bank account to the beneficiary account, and they are like dealing with this problem of getting on-chain information with off-chain information. So I think this particular case of use fits very well what you are doing with API3 and Node, because in the end, the company subtracts and consumes information from the financial entities and then processes the information into their blockchain platform. And for some part of the process, they need to rely on some payment APIs or some ID verification APIs. So they are resolving this issue, but I think that with this technology or with this solution, it will be much easier and standardized than what they are doing now. No? So I think that this is something very, a very particular use case for what we are talking about. No?
Yeah, cool.
Absolutely, and it seems like it already has some traction. So for sure, we would like to invite them to our tech sprints and see what else can they add on top of what they're doing with using API3 technology and OBP APIs at its core. But I think right now we're moving on to the next stage of the questions, and Robert will be taking over now with some questions.
Yeah, sure. So one of the questions that we have is, especially now with what happened last year with coronavirus, it really showed a lot of flaws within the financial system. And so, for example, governments are exploring CBDCs, central bank digital currencies. And so one of the things that they're exploring is, a step away from these from cash to actual digital money. And so blockchains are often brought up in these discussions. And so one of the questions is, well, how can API3 and the OpenBank Project serve as a hub for governments to look at when exploring CBDCs and see this partnership as a hub for blockchain-based adoptions? And what can API3 and OpenBank Project do to help in that mission, in that discovery mission?
So should I maybe take that?
I guess is this again like to all?
Yes,
Okay.
to all participants.
Yeah, sure, Simon, go ahead. I can follow up.
Okay, well, I guess first thing is, what we do for banks and regulators on this topic is like to make the whole topic a little bit less scary, right? So when I'm like teaching educating or communicating about APIs and so on to regulators and bank back in the earlier days, I would always like draw comparisons between web browsers and URLs and making REST calls and stuff like that, just to kind of bring it down to, so it's not quite as scary and so on. And I think we could do similar thing with the whole blockchain space, right? I mean, there's obviously lots of concepts and terminology and technology that needs to be kind of explained. And I think this really comes to life. So our experience of organizing many hackathons over the years, starting back, I think the first one was 2013 in London at the FinTech Innovation Lab. Banks and individuals at banks and departments at banks, they really respond well to seeing use cases and live apps being, built quickly, developed and working, right? And so I think this is one of the things that we can do. And, on a kind of sort of going forward perspective, when these central bank coins come in, as they will, these coins will want to be in everyone's apps as well, right? So just like I can see, my various bank accounts on my app or one bank account in my desktop device, right? I'll want to see my balances in various currencies there as well. So it will just make, so REST APIs and the apps which consume them are not going away, any super time soon, right? But we'll want to interact with the blockchain. It'll be just like plugging into a new source of power, or plugging into, I've got a synthesizer over here. So, plugging into a new synthesizer, right? You can get some different sounds out of the synthesizer. You can get some different features and functionality. And let's face it, there's lots of wealth going into the whole blockchain. There's lots of wealth in blockchains right now, right? And it just totally makes sense for these assets to move more freely between the two, or at least the information about them to move more freely.
Hey, Simon, thanks for that. I would like to take it a step backward and just give maybe a little bit bird's eye view on my thoughts from being an economist on what are the implications of this, and what are some risks of the CBDCs. And when you think about it in terms of monetary policy, when a central bank directly issues currencies to the consumers, then the consumers, the banks are at direct risk of losing the way they do money, because usually the central bank issues money, they give a discount rate, the bank gets the money at a discount rate, which the bank then gives to the consumers. So if central banks were to issue digital money to the consumers, it would be a direct threat to monetary policy as we know it. So I think here the challenge is, okay, how will banks integrate these CBDCs and pass it to the consumers so they can do payments on their daily lives? And I think here, whether it comes of a private blockchain or a public blockchain, with our partnership with API3, we will be prepared to put those rails, those infrastructures for CBDCs to come onto the banking industry and be deployed onto a mobile payments app, so it will not cut out the banks. So that's just some of my ideas on how will this move forward. And another big challenge is just a personal background here on my end, is that I'm from El Salvador, and I was coming here last Friday, and I just landed to the news that El Salvador accepts Bitcoin as legal tender, first country in the world to do that. So a few days later, I get contacted, and I'm in a meeting with the Ministry of Finance, and they're all worried because they have no idea what this means, you know. And then I told them, like, look, first relax, because for a legal for a cryptocurrency to be considered as legal tender and enter an economy, first you need to solve the identity issue. How do you link that Bitcoin to a real identity? And this, again, is one of the proof points that we're exploring in this partnership. But if any of you guys, Raul, Heikki, have some other thoughts about this, I'm really happy to hear.
Yeah, I think from a overall perspective, this has the potential to be a similar situation for the banks as open banking was initially. It can be seen as both a disintermediation threat or a big opportunity to kind of expand on their services and also create more connectivity between consumers and fintechs and blockchain-based applications. And I think overall CBDCs have the opportunity to really kind of push DeFi to the mainstream, in the sense that it sort of forces digital currencies on consumers, in the sense that if you have digital dollars that are compatible with blockchain-based platforms that exist on these platforms, then if those platforms are anything like the platforms of today, where you can build any sort of deterministic application on Ethereum and then just have that, and it does something useful with in the financial space, then essentially you holding digital currency makes your financial self very compatible with that new ecosystem of decentralized applications. And as this kind of like grows and gains adoption, I think it just means that we have a lot more people with access to DeFi and decentralized applications in general. And then that means that there's also more demand for different types of applications beyond just the stuff that we currently see in DeFi, which is mostly about borrowing, lending, leverage positions on cryptocurrencies, and things like this. Like it creates more demand for something like the current fintech space, which is already connected to the real world and has the ability to connect to APIs and stack APIs on top of each other to create all kinds of useful applications. So I think with this added demand, and there's going to be sort of added supply on the application side, and then when you connect real world data and banking data and banking functionalities and all kinds of API delivered services to this Web3 space, I think it's going to look essentially nothing like it does at the moment. So yeah, it's exciting times. Raul?
Yeah, I agree with you, Heikki and Simon. We'll turn off my video. I think that, for example, regarding the CBDCs, there is an issue, as Francisco was saying, with monetary policy, because, for example, here in Mexico, one of the worries about the central bank is that they could lose the control, no? For example, about issuing the coins or about controlling the monetary policy. So we have had some interesting discussions with officers from the central bank, and they recognize that in the end, Mexico will have some CBDC at some time. However, they haven't specified about a timeline, or they haven't comment on specific agreements. So I think that they're just looking at what is the impact or the outcome of having a CBDC. However, for example, in Mexico, I think that there are some important efforts about cryptocurrencies. We have just had the announcement of Mexican stablecoin, which is called PEXO. It's spelled PXO, no? And this PEXO stablecoin seems to have some leverage and impact within the remittances business. In Mexico, remittances is one of the most important sources of income for the country, along with the tourism and along with the oil sales or oil business. So this PEXO stablecoin will be used for remittance transmission. So I think that while the regulators and the central banks are still like having the discussion about how this CBDC could be used or could be issued or could be managed, I think that in the meantime, for the industry side, projects like this Mexican stablecoin are very important so that they can show the importance of having these digital currencies. No?
That's a phenomenal. That's a phenomenal insight, Raul, and that really leaves open the door to so many more innovations and opportunities. And now, since we're running up against time, we'd like to open up the floor for any Q&A. Francisco, you may have access to the chat.
Yeah, I have one question actually, and basically is if it will run on Cardano, if this will work on Cardano, if we will develop something on Cardano.
I guess I can answer that from API3 side. So yeah, I like we're building everything that we're building to be very blockchain agnostic. So so that means that, you know, even UTXO based chains like Cardano would be covered by the air node. At the same time, like we do have this sort of priority of trying to serve as many of the existing use cases as possible. So at the moment, I think we have a pretty strong Ethereum focus, and that obviously also entails the EVM compatible chains, because from an integration perspective, that's a short step away. But yeah, so overall, Cardano is an interesting platform for smart contract development and our space as a whole. So so yeah, like it very much falls within our scope of remaining as blockchain agnostic as possible.
Thank you, Heikki. We have another question here from Dennis Scott, and that is, are there any pilot studies where banks are offering DeFi services for enterprise?
I think you guys are probably, Simon, maybe Raul, if you've heard of this stuff, Francisco.
Personally, no. And I think that question reflects that he really has the vision of what we're trying to do, because to offer DeFi for enterprise, it requires this whole open banking component with an air node, and to make accessible DeFi product onto the banking experience or the banking industry. And this is precisely what we're trying to build on. Perhaps making a specific banking asset class the new source of collateral to provide DeFi to banking users. And very good question. Thanks for that. I don't know if anyone wants to expand on that.
Yeah, I mean, I mean, you said it, Francisco. This is what we want to do, right? And we want to bring some banks into some of the textbooks, you know, and invite them in and yeah, show them the art of the possible. Yeah.
Yeah, maybe like as an idea, like just even connecting the existing DeFi ecosystem to bank services that they can offer to some of their customers. I think that's also a regulatory perspective there, in terms of like, you know, is this something that banks could do, like basically offer kind of DeFi stable returns on a person's funds, for example? I think that's an interesting question. So banks certainly like play a role on both sides, or have the ability to play a role on both sides.
Thanks, Heikki. So I think for now, we don't have any more questions. A question was asked, and it seems the feedback here of the community would like to see these developments be done on Ethereum, Ethereum 2.0. Yeah, so that's great, because it's in alignment of what we think would cause more adoption. We also have a Quorum as a significant contender, which makes sense because it's the banking industry. And then we have also Cardinal there. And then for last, we have Polygon and Polkadot.
We do also have a question in the Q&A from Alan White. If you click on Q&A.
Q&A. Yeah. Is anyone familiar with a data sharing DApp project for open banking? At the moment, no, we're not aware of any. I don't know if any of you guys here is aware.
I think this is what we're really working towards, and these tech sprints are really going for the focus and to really build out these different, allow the opportunity, allow for a hub to happen for different developers and different community members to come aboard and build these dApps to see what can be done. And for example, what the panel just presented with CBDCs as being a possible experimentation process to get the scariness, as Simon mentioned, out of the way, that could be a part of these discussions. And part of this, I want to ask, if we don't have any more Q&As, I want to, if there is, please stop me, but if there isn't, I'd like to ask Raul, what can we do to make as compliant friendly and regulatory friendly applications built on the blockchain pass regulatory muster, pass these regulatory scrutiny within your experience?
Thanks, Robert. Yes, well, actually, for example, in the case of Mexico, the regulator is very open to innovation. So actually, when talking about compliance, what the regulator worries about is, for example, the security of the information, that the information is stored in a reliable manner, that is available, for example, that you have in place all the controls and measures so that if you receive an attack, you can deal with that attack, and fortunately you don't have any breach. So that's mainly what the regulator is worried about. They're not that worried about the technology that is in the backside. For example, it can be blockchain, it can be another technology. So actually, from the business side, there are some institutions that are developing some open finance APIs that do not fall under the regulatory APIs, and they see these banks, they see it as an opportunity to develop a business or a revenue coming from these APIs. And some of them are very looking forward, and they are exploring technologies like blockchain, like to merge these processes. I spoke about this case of use regarding this company that is offering like this credit product using blockchain and APIs, and they are now merging into one single platform. So since this is a pilot that the regulator is or will authorize anytime soon, I think that more of these examples we will see it in the near future. So while you have managed the information security controls, I think that you are on the other side, and also that you can justify and show the regulators how you are doing it.
Thank you, Raul. Sorry for cutting it short here. I would like to make a clarification to Alan McDonald that they say that there's a DApp project for open banking. And even though it has some similar connotations, it has a complete different objective of what we're trying to do here. They do sell data to marketplaces. We don't even know if that's GDPR compliant, but in this whole vision, we have 3 points. We have the open banking project feeding direct banking data via the air node to the blockchain platform, so developers can build and use open banking APIs to create new type of solution for the next generation of financial services, which brings open banking and a blockchain technology at its core. So, but thank you. I think it's a good point that you brought up, but it's totally different from the vision and mission of what we're doing here.
And we definitely want to respect everyone's time for joining us today, from the audience to the panel and the folks at EEA. So we want to say a big thank you. I think we should wrap up here, and a big thank you to the audience, a big thank you to EEA and the panelists, of course. Any last minute thoughts before we sign off?
No, I
Come to
think
the tech sprints, right? Come to the tech sprints.
Yes.
That's right.
Yeah.
And I
Come to
think
tech sprints.
we ought to pass it back to Brittany for some closing remarks on behalf of EEA.
Thank you, Francisco, and thank you for everyone else for joining us as well. It was great. Please feel free to place your social media handles in the chat so all attendees can follow your work. For additional information about joining the EEA, please reach out to membership@entealliance.org or visit us on our website at https://entealliance.org/join, or you can also follow the EEA on Facebook, Twitter, and LinkedIn. Thank you. This concludes today's EEA Education Series webinar.
Thank you, everyone. Bye-bye.
Ciao, bye.
Take care.